All right, I think we're good to go here. Let me go ahead, pull the chart up. We don't want to have that in the beginning. You guys aren't meant to see that, right? There's no reason for you to see the playlist, but you did, and it's there. And that's just what happens when you go live sometimes, man. Welcome to the stream. Happy Wednesday. Happy freaking bloody Wednesday, I guess, if you want to call it that, for crypto. And the stock markets too, man. Everything has just really took a dive today, and going down to the levels we've been talking about for weeks, really here. Ever since we broke down below 52, 53, you know, the next level was that 45 mark that had been touched so many times, and then the breakdown from there, next spot made sense, was 43,000. So it is there. It is seemingly trying to hold it right now. We're going to take a look at it more in depth to get a better understanding of what's going on right now, but just gross, dude.
God,
obligatory Zeus.
Let the heavens rage!
This is what it feels like is happening. Right? Oh, he didn't play for some reason. Okay, that's cool too. Whatever, man. We'll just keep it moving. All right, there's supposed to be lightning and stuff. Let me try it. Let me test another.
God,
all right, dude, what is going on here? Stream Deck doesn't feel like working. Whatever, man. We'll just keep it moving, all right? So let's take a look at Bitcoin. All right, down 5% as of right now. Has fallen through that $45,000 level of support and has come down to 43,000, right? The level that we thought it would come down to. The level that makes sense. You had that hammer come down, December 4th, touch it, area of consolidation down here. And if we throw the Fibonacci extensions on it, I do believe we had some confluence going on here. Yeah, so the 886 lining up for your most recent swing low here back from September, right? The 886 lining up almost perfectly with that point. So just makes sense, man, for you to get some kind of reaction down here. And on the daily, you can't really tell, but if you move it to the 4 hour, it's hard to even tell on the 4 hour, right? It just got there so quick. And that's something that we were hoping we wouldn't see down at this level. What we wanted was just a slower go, right? Just kind of up and down and slowly coming down, and then just painting lower levels of negative momentum, right? To get some divergence going on, something. And we didn't get that, man. We got here in a real fast hurry, and we just move it to the hourly. Like, no divergence or anything on the hourly, oversold, and now seemingly trying to pivot. The last hourly candle, you did get a hammer on it, and it is trying to hold 43,000 as support. But what we wanted coming down here was some kind of like divergence or something. Signals of seller exhaustion, stuff like that, and we're not getting that as of right now. All right, it looks like it's trying to, yeah, but as far as the 4 hour and the daily are concerned, there's nothing on there. So the hourly, if you could start to pivot up here, cool. Again, you don't have any divergence or anything, so a serious reversal, I don't see any indication of a serious reversal here, based on significant time scales that matter. So don't really care too much about the 1 hour. It just kind of is telling us, yeah, sure, we're treating 43 as support as we thought it would. So it's something to monitor for sure, but dude, just not good. And I know a big reason for this was just a lot of Fed talk, right? And I'll take a stab at it to try and understand really, I guess, what's going on. It's that the Fed is saying they're going to roll back essentially buying securities, and when they buy securities, they provide cash into the market. So as well as with stimulus, like everything else going on with COVID, stimulus packages, all that stuff. So they're printing free money and then buying treasuries to flood the market with cash, and simultaneously lowering interest rates. So when they're doing this, there's an oversupply of cash, and the interest rates are very cheap, so it's also easy to borrow. So money is extremely cheap in this situation, I guess, this scenario, meaning everybody could go out and they felt like they could afford the nice steaks and they could afford to buy a home, right? Mortgage rates were low, all that kind of stuff. So what's going to happen now, as well as purchase stocks, companies were able to go out and buy more, inventory, take out more loans, expand, all that kind of stuff. The way that I understand it is that when, and this is what the Fed is saying they're going to do now, is to start rolling that back, right? They're going to not be buying securities anymore, but they're going to start selling them and start rolling down their balance sheet. So essentially, and simultaneously raising rates. So essentially, when they start raising rates on things like mortgages and all that kind of stuff, more money is going towards the mortgage payments, meaning there's less money to go out and spend on whatever, any number of goods, right? You have to start budgeting and cutting back. So decrease in demand now, right, for those goods causes those prices to drop, which is how you fight inflation, right? Inflation just being prices continuously going up. So if the demand starts to fall because things are becoming more expensive at home and from a borrowing perspective, then prices should come down with it. But at the same time, Bitcoin is seen as a hedge against inflation, and inflation is being fought and coming down, and companies are seeing that borrowing is going to be more expensive, so expanding is going to be more expensive and slow. Then that could be a reason as to why you're seeing the stocks drop and stuff, because expansion is hypothetically or theoretically expected to slow, right? So that's the way I understand it. I might be off a little bit on that, but I know that there was some Fed news that came out that really just pushed it over the edge, because again, on Bitcoin, we had 1, 2, 3, 4, 5, 6, 7 touches of 45,600. And it was just a matter of time. And once you got a candle close below 45, like 800, like a body, it was pretty much game over. So even really yesterday, because the day before that you closed, where'd you close that there? 46,459. All right, you were still above these low points back from December 17th, December 18th, down around like 46.1. So really it was yesterday's candle that did in fact close below it. All right, you had your lowest daily candle close, I guess really since December 17th, and it was still trying to hold it kind of locally. And then if that news was the switch that pushed it down below there, then that support didn't really stand a chance. You did not need any kind of negative news for sure at this level. It's probably the worst time you could have gotten it. So you got it apparently. That 4-hour candle closed a massive bearish engulfing, and you just went straight down to 43,000. All right, which again was the 886 retrace of the local low to high here. I don't know if there was, I think there was a little confluence here as well between the Fibonacci levels. So if we just go from the low in July and then the low more recently in September, the 886 is where you fall into here. And it's in between the 618 and the 786 from that swing. So as far as this low back here from July is concerned, the only level that makes sense really would be to come back down to here to like 40,000. All right, that's definitely going to be your next level of support if you fall below 43,000. Just come back and do a full reset from September 21st until now. That makes sense to me. All right, and then if you break below that, you might get some help at like the 786. You do have these peaks back here. So from January 8th of 2021 and June 15th of 2021, you've got these peaks at like, what is that? 41.8. You got it touched almost 3 times. 1, 2, 3. So, that could be a level. I would almost regard that as where you're currently at right now, like the 43 mark. As far as Fibonacci levels and stuff are concerned, heading down to 40,000 makes more sense. I don't know that those peaks will necessarily hold. But we'll continue to monitor it. And the thing you got to take into consideration here is, all right, you had Class A bullish divergence going on. If you can pivot the MACD above this line, right? If you can do something like that and start to reverse, you will technically then have, double Class A bullish divergence. All right. So as long as seller exhaustion just keeps building and building as we go down, and we're getting lower levels of negative momentum, or higher levels, I guess you should say, with lower price, then that's where we could really start to see some reversals and see something good. And then at that point, we got to come back up and break all of what will now be resistance. So, dude, it's just not really good. Today is definitely, it was kind of expected. Again, we've been talking about this for weeks. We said if 45 breaks, 43 is the next level it's going to. And color me shocked, dude. We're hanging out there and trying to hold it. All right, so say what you want about technical analysis. I know it doesn't work all the time, and it's not meant to work all the time, but I've seen too many times where you can almost just, if I had to bet that 43 was going to hold as some sort of support, or if I had to bet that most levels that make sense with Fibonacci and all that stuff had to hold, then I'd be making a lot of money. But it's just tough, man. As a swing trader, you want to wait to see signs of reversal and then confirmation and then get in, or come back and confirm and then get in, right? You don't want to just get it in off of dumps and reactions. You like to see confirmation, all right? So the hourly trying to paint a little something, but again, there's no divergence or anything, so it's just super oversold and getting some relief at a level that makes sense, all right? Let's move to the weekly. All right, so here's the other thing, and here's what we need to talk about as well. So the weekly, right, this is the danger of where it's at right now. So while it is a level that could reverse, could be a level to take a trade on, whatever the case is, if we were getting the right signs, you're also basically at the neckline of this kind of weekly head and shoulders pattern. So this is just really not good. It is not bullish at all. It's on the weekly time frame. This is the kind of stuff, man, if you break the neckline and you close the body below it, and I'm talking you close at like 42.71, there's really not much support until like you get into this area of consolidation down here around like May to July. Right, and that's down at like 30,000. So you could see something like that. All right, and at that point, that's almost even, you almost even have just a bigger head and shoulder structure at that point. All right, so then you break, so it's almost like you have two necklines kind of here, right? So you have this neckline, which is like a small head and shoulders, and then you get down here, and you've got a bigger structure, right? Almost like a bigger head and shoulders with a new neckline down here at like 30,000. And if you break 30,000, there's nothing until like 20. So we don't want to get ahead of ourselves here, but the weekly time scale, man, it just doesn't look good, right? This doesn't make me feel warm and fuzzy, and if I flip it over, this is exactly what we'd be looking for to potentially like take a long on, right? You got an inverse head and shoulders on the weekly potentially, right? At lows, getting, I don't know, if the inverse of this, I guess, would be like Class A bullish divergence, I think. Maybe. But, yeah, you got to be very careful here, man. And if you do plan on taking a position or a long here, and we're talking about swing trading, right? You got to have a stop loss below 40. All right, at a minimum. Okay, maybe even a little bit higher. But that's it, man. That's Bitcoin. Had a feeling I was going to do this, and assets rarely touch a line of support 7 times before holding. Now this, if you really look at it as far as like the overall movement, it kind of came up and then it tried to confirm it as support. Oh my god, and then we got a bullish engulfing candle and then just rejected off of the 200-day moving average. So the rejection off the 200-day moving average really was kind of the confirmation of resistance. And then earlier on in the day, before this dumped, I literally saw it like 2 minutes before it actually started dumping off. I just watched it live. We had a candle here that had a very long upper wick, right? Which is just, you don't want to see long upper wicks kind of stuff. It was turning red. Just confirmation of just selling pressure at the line, right? This is the line that needed to hold. Right? Toto. And it didn't happen. All right, we did not hold the line, so now we're trying to hold this line at 43. So we'll see, dude. We'll see if it can hold, but not seeing much that's making me feel super confident that it will right now, okay? That could change tomorrow. The hourly could just continue to come up and hold, and then, I don't know, reject here and come down, and then confirm and hold, and then start moving. I don't know, right? We can't tell anything just by looking at these two candles, really, except that you just have a massive bearish engulfing candle. The only thing that's giving us some data right now is the 1 hour, and you could probably move it back to like the 30-minute and stuff. I'm not going to do that, but a hammer, some green candle, some waning negative momentum, try to come out of oversold territory on the RSI, and try to pivot here, man. We got to hold this. So that's Bitcoin, all right? And I mean, really, we've been here many times if you've been in Bitcoin. Like, it's down 5% on the day. We got, what, 3 minutes till this closes? It's like, yeah, it's down 5. Okay, on December 28th, we were down 6.26. On December 4th, we were down 8% on the day, right? 5% on the 3rd. Move it back to September 20th, right? We were down 9% on the day, 11% on September 7th. So it's like, I get it, man. And it looks scary when Bitcoin sells off like this. And in a way, it kind of is, because we are at critical support at this point, very serious levels. But this kind of volatility in Bitcoin, if you've been around for a little while, you should expect it. If you haven't, good luck to you, man. I hope if you've got a therapist or something on standby, you shouldn't be leveraged to that point. But yeah, man. I hope you're doing okay. All right.
Nope.
Maybe you should see this guy.
Okay.
Go see one of these guys. All right, dude. That's Bitcoin. Let's move it to Ethereum. All right. Take a quick look at it. Down 6% on the day. 6.3. Let's move to the daily. All right. So with the daily, it's not as clean as I would like it. Or something like that. All right, so technically on the daily, from the weekly, daily hasn't broken its trend line. It has come down, and we've had this level painted for a while now. Let me go ahead and throw a fib on this, kind of see where we're looking at. All right, we're at the 618. Okay, and let me try and find maybe some confluence or something with this lower low back from July, right? We do the same thing with Bitcoin. We got to do it with Ethereum, all right? So Ethereum, the 50% retrace from that low back in July, line up with the bottom of the box. The 618 from the local low back here lining up with the top, right? So this is the zone, also lining up with this kind of top of consolidation back here in August, right? Or right around $3,300. So this box really just has a ton of support. On top of that, the 200-day moving average is like right in the middle of it. This supply line, this demand line, this bottom trend line is meeting up there as well. So it makes a ton of sense for this to be an area of support. And we fall below this. Maybe the weekly gives us a little bit of an easier picture of the support. Now let's move back to the daily. Yeah, I mean, we fall below this, and really, I'm looking at like these peaks back here from May 27th, June 3rd, lining up with just an area of consolidation here. And right at the 618 from the low back in July to the all-time high. So, yeah, dude, that area makes a lot of sense to me to see as a next level support. So, you break below, what, 33.44, the bottom of this box, you're probably heading down to like 28, 2,900. All right, which is just a further 17%. All right. Bottom of the box here being a further, what, like 6% to go. All right. And that level again makes sense. Right around the 50%. Retrace of this point as well. So, and the 200-day moving average. So a lot of assets are coming down to meet their 200-day moving average, test them. On the daily, actually. Didn't quite touch it yet, but I mean, obviously a bearish engulfing candle. The daily did just close a minute ago. So you close this bearish engulfing candle. That lower wick is showing some support down here, but I don't know, man. Let me see. Clean this up.
Are you guys having a killer time?
Yeah, so the 4 hour just coming down, touching this demand line almost like perfectly before coming back up, and that's at about 34.16. Yeah, which is just right by the 200-day moving average and that trend line, man. All right. So selling seemingly continuing. Again, we can't see much on the 4 hour. So we got to move it to the hourly again, right? To see what this is maybe doing. The last hourly candle. All right, so you got a big hammer type candle 2 hours ago. The last hour, just an indecision candle, and now being followed up with some selling. All right, we want to start seeing some buying here. You know, this could just start coming down to a 3,416, where it got the last support at that. Is that the trend line, right? Down at the trend line again. That's most likely where it's headed, man. Let me see. You're getting very close. Yeah. Well, so I mean, if you can pivot, right, where this negative momentum was, you're probably not going to be able to get Class A bullish divergence on the 4 hour on the MACD, but if we go ahead and move it back here, I don't know if I want to do that though. Any pivot above like 20 on the RSI would give you some Class A bullish divergence on the RSI. I don't love when you have these dips right here from like December 31st, because at that point it's just kind of bearish confluence. And really, I mean, that was a serious point of selling off. So for me on the RSI, I would definitely consider that valley after this sell-off. So I wouldn't even consider Class A bullish divergence on the RSI. So I don't see any divergence as of right now on Ethereum on the 4 hour. Definitely don't see any on the 1 hour. Just oversold. And did have it on the daily, man. You almost had like double, right? Little weird because you had selling off this little island, right? So just because it doesn't go green necessarily, it's trying to go and then doesn't. So to me, this isn't one full island. It's kind of like two in a way. And this little piece here, December 8th, I'd almost count it as like a green point of breaking it up. It just doesn't make too much sense to me. You just joined. Can I start over? Yeah, dude, absolutely. Let me just, let me go ahead. Damn, I don't have the time clock anymore, but I'll go ahead. Dude, why are none of my buttons working? None of my,
And it's gone.
none of my images are showing up for some reason. What is going on? All right. Let me just check something real quick. Danny, welcome, dude. I can't start over, but I can continue if that's all right. You know what I mean? I will continue for you. I won't just stop in the middle and end it. I will continue. But yeah, dude, my My buttons aren't working for some reason. I don't understand what's going on here.
Okay.
Yeah, dude, none of my images are working, so that's cool. Nice, nice. Awesome, I love it when things don't work. Captain Hindsight can't even get in here. Dang. Okay, whatever, man. Gross.
It's a piece of crap. It doesn't work.
Literally, that's probably the
It's a
perfect
piece of
sound
crap.
for
It
this.
doesn't work.
All right, man. Streamlabs.
It's a piece of crap. It doesn't work.
All right. So that's Ethereum, man. Let me see. Where was I? Fire away, dude. Will do. Will do. Oh.
Confirmed.
Cool. All right. So let's see. That's pretty much it for Ethereum. Wasn't too much else to say about that. You break below the bottom of this range here, this green zone, the 200-day moving average, the bottom trend line, the demand line, right? You're heading down to like 3,000. Okay, psychological area consolidation. The spot that makes more sense is 2,800 being the 618 Fibonacci retrace from your low in July to your all-time high, right? Notice the confluence lining up pretty much perfectly with these peaks back here from May and June as well. All right, so that makes sense to me. If we continue selling, and again, I'll talk since you're a little late here, Danny, on the weekly for Bitcoin, right? I'll move it in a little bit sooner. All we can see really is on the hourly, and it got a similar thing on Ethereum. Hammer, right? Indecision. I mean, we still have 52 minutes. We just got this hourly close, but kind of more indecision, nothing definitive, no divergence or anything, right? Not any reversal indicators yet. So, dude, I don't know, man. I don't know that we're going to hold 43 and pivot. We got here so quick that I wanted to see like some, and then a green, and then a red, and then a green, and a green, and a red, and a green, 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 red, 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 green, red, red. And that entire time, we would be getting like some Class A bullish divergence or something. But that was not the case, man. We didn't get so lucky. So we got down here very quick, and we kind of need a miracle to hold and start to pivot, because there's certainly no divergence on the daily yet, but there could be if we do start to pivot. We could have, this is what this is, right? Imagine that these red histogram bars come up to here because we continue selling a bit. Really, we don't want to sell anymore, though. We don't want to get below 43 and close below it. So really, it would have to like pivot here, maybe a little bit higher, but we want to start pivoting like now. We could potentially be getting some like double Class A bullish divergence. All right, but not right now, man. Still building. So we'll see. Let's go ahead. Let's take a look at Tesla, dude. A lot of stocks got wrecked. Tesla, kind of one of them, I guess, right? Down 5% today, 4% yesterday. So it's down like 10% over the last 2 days after gapping up. Now, one thing to consider here.
Okay.
When assets gap like this, oftentimes they'll fill the gap. That's what it's called. So they'll come back down, price will come back down, fill the gap. Gaps can often be referred to as levels of support as well. So it has pretty much filled the gap at this point. Almost, I'd say, down at like 1,073 would officially be closing this daily gap, where you could start to get some support and head back towards these peaks back here from like November and early December, and kind of now, the past couple days. So let me see. Move it to the weekly. Bullish engulfing candle to a shooting star to gap up to coming down. You always like to see it. It's always fun stuff. A gap. So a gap happens. That's actually pretty good. The way that I understand a gap is basically before the market opens, like pre-market, the price has already been determined to be higher or lower before that market opened. So let's say it closed at, what did it close here? December 27th. It closed 1,056, right? And then overnight, whatever happens during that time, demand and all that stuff comes in. They know that at open, the price of Tesla is now, like the asking price for it is going to be $1,137. So when it opens at $1,137. The mechanics behind all that, I'm not really sure. I just know that it's like post-market stuff, post and pre-market, after hours kind of activity. But what I do know as far as the world of technical analysis is that the gaps often fill. You'll hear that a lot. Not always, but often. You'll notice like back here, December 6th, right? Gapped up and then came down and closed it. Now that one fell through, but you know, you can, if you go back and look at gaps, you'll notice that a lot of the times they get filled. So you're pretty much filling, and this is a big one. So you're trying to fill it right now and hold that as support before going again. The issue is that the overall market conditions are seemingly pretty bearish at the moment with what the Fed's saying and all that stuff. Yeah, sorry, dude. I wish I knew how to explain that. I wish I was smarter, but I'm not really. I just kind of know like gaps exist and they get filled a lot, and it's just a difference between price, pre and post market.
Right.
You know, dude.
Frosty!
Keep your brain frosty. Yeah.
Frosty!
And he's not showing up, dude. Cool. All right. But yeah, it's seemingly filled. Now, let's take a look at the monthly again, right? Because while it didn't get completely devastated right away, this is not good showing bearish divergence, right? On a monthly time scale. And I don't know, man. I'm a little bit worried going into 2022 with... I just saw recently as well that we had a trade deal with China, and they have missed miserably by meeting the metrics that we have planned out. So China's basically giving us the finger, and it's like, what do you do? Because we already have record inflation going on, so what do we start a trade war with them where they manufacture 75% of our shit? And by starting this trade war, prices on those goods and products will just increase even further on top of what we already have. It's like, but if we don't do anything, then they can basically just say, F you, you have no leverage over us. We can just continue to disrespect our deals and stuff like that and just continue to screw us. So, dude, I don't know. What, and Biden's the guy to get it done, I guess. But, yeah, it's easy enough. The price isn't tracked via the candles for post pre-market, so when a lot happens, there will be a gnarly gap. Yeah, dude, exactly. I mean, we've seen some insane gaps on here before where it's like just drops literally down into the abyss, like down here, right? And that's just people. Again, I'm not super familiar with the post and pre-market stuff, but behind the scenes, all that stuff going on, and just having their sell orders like ready. That might be a part of it too, a mechanism, is that people like put pre-sells as soon as the market opens. So as soon as the market opens, like the second it does, all of those try to get filled. All of these like stops, all of these market orders to sell. And market orders just get filled at the best available price they can. So it just, the guy at the bottom of that ladder who had the slowest quantum computer gets screwed, dude, you know what I mean? He's sitting there just like, you know what I'm saying? I think. I might be completely wrong on that, but it makes sense to me. But yeah, dude, the monthly still waning positive momentum, right? Lower highs. This is still an effective bearish sentiment on Tesla, right? And just look at it, man. Would you look at that? Just from June of 2019. Up 3,000% on a stock? I mean, dude. Kidding me? It's like, I think I'm gonna make 300% on Tesla this year.
Oh, do ya?
Oh, dude, just for you too, man. Oh, what is it? JP Morgan sticks his franken beans right in Robin Hood's mouth, is what you're saying. Yeah, basically. Basically. It's more like the Fed. JP Morgan, like the bank or whatever. I mean, he's probably like part of the Fed or in some weird like conspiracy way, but yeah, dude, I mean, I don't know, man. The next couple of years could be rough. They start raising interest rates and all that. That's one way to fight the inflation, right? Because then it's more expensive just to pay for your home, so you're not going out and buying more goods, right? You pull back on your consumer spending, lowering the prices because demand is lower and giving the supply a chance to blah, 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 blah. I don't know, I guess. But, yeah, man. We'll see. God bless anybody who bought a house, 30% markup, because money is so cheap right now. But yeah, you got a good mortgage rate and stuff too. So it's like, you might be down on your equity, but you got a cheap payment for a nice house, but you were paid. I don't know, man. But yeah, so Tesla. Doing things, and really the grand scheme of things, but nothing crazy. If you just zoom out, and that makes you can get very comfortable just zooming out, dude. Like, go to the monthly on Bitcoin and just zoom out. It's like, okay, what? Like, what do you have to say to me? All right, it looks fine, all right? Now we're talking this is long term, long term, but yeah, when you zoom in is when it gets a little bit scary. But hey, we swing trade, baby, and that's what we do. We zoom in and we look for swings and we look for edges in shorter time frames like the daily and the weekly and the 4-hour, okay? Cool. All right, let's move it to the total market cap for crypto. See what's going on here. The daily did close below the 200-day moving average for the first time since August 2nd. Which is what? 155 days. So what's that, like 5 months? Right? 5 times 30, I think. 5 months we've been above the 200-day moving average. We are now below it for the first time. Closed below it. Trying to seemingly hold it at $2.07 trillion. $2.078 trillion. We started the day at 2.2, so we have lost what? $130 billion over the course of the day in crypto.
Oh my God.
Hold up. Wait a minute. Something ain't right.
Yikes. It's a lot. But again, we've been here before, right? December 28th, it was down 6.24%. So, what was it? 7.5% on December 13th, right? So it's like, yeah, dude, these days suck. And everything's red, so it looks scary, and everybody's wondering if this is it, if this is the end. The only thing that just makes this more significant is, like, you're getting close to just a major, when you have these major run-ups like this, you're getting close to, like, major dumps. And you can see what happens when you break support, right? How quickly it could just go straight down to 43. Dude, it happens all the time, man. So it's like, all right, we're at the next level of critical support. You break below this, it could be a very quick run down to 40,000, which is another 8%, okay? And you don't want to see that happen, but right now at the 886, could be a super easy long position if we start to see reversals, all right? Stop loss right below it at like 42.4 or something. But as of right now, we don't have that confirmation yet. We gotta wait because it just happened. All right, so just looking back at the total market cap, where we have fib-wise here. All right, right like the 786. Again, trying to hold the 200-day moving average. See if we can get some confluence from back in July like we've been doing with a lot of assets. Damn, dude, this song's freaking bumping.
Okay.
Let's go. All right, so the 50% retrace from the low in July to the all-time high. 50% retrace lining up right with the 200-day moving average. So cool, man. All right, right around the 786 of this low back from September to the high. So we've got a little box of confluence going on here. Sounds kind of like a flu remedy, some kind of cold medicine, box of confluence. But it's not. It's just numbers and chart stuff. Little chart humor, right? Now the same thing with this for the total market cap. If you can start to pivot above like minus 28 on the MACD here, then you could get some potential Class A bullish divergence, right? Some double Class A. All right, get rid of this disgusting bearish, hidden bearish divergence that we had, right? Like the writing was in the sand with this stuff as far as selling off. It's like you had, major bearish divergence going on the MACD and the RSI showing continuation. Like we talk about this, you just hope, right? You look for signs of reversing and you just kind of hope, but really deep down, for weeks we've been saying this, right? I've been saying this, that 43 looks like where we're going based on stuff, and then you get some stuff throughout the day that looks like some reversal, some weakening of sellers, and then it just falls through and dumps, and you touch 45,000 7 different times, and it's like, oh, maybe on the 8th time, all right? Usually if you don't get it after the 3rd, it's a rough go that you're going to reverse like the 4th time. Yeah, so we're in this little zone here. It makes sense. Fall below the 200-day moving average, and you're probably coming down here to like 1.9 trillion. All right, that's at the 886 from the September low, right around the 618 from the July low. So the golden mean ratio area, as well as this just area of consolidation, and a little peak back here from March 14th. All right, so we could go ahead, throw a horizontal on that guy. All right, this level down here makes sense if you break below this zone here, all right? But a break below the 200-day moving average is not good as far as looking for, levels of serious support. And again, we're not going to get anything on the 4-hour either here, so if we want to look really locally, everything is doing this, man. It's got a hammer on the hour because it was such aggressive selling, an indecision candle directly after, and just little bits of local selling, not what you want to see. You want to start seeing this start to get bought back up, and we're desperate here, all right? We're talking about the 1 hour, hoping, right, that it can turn this little to the doji that could and start to and get like a bullish engulfing candle. Oh my god, could you imagine that? Like a bullish engulfing like that right after, and then it's reversing back up, and then to the 200-day moving average before it dumps again. I don't know at that point, but you always want to see support hold and try to reverse, right? That's where we look to enter a trade at support. Because you could just long it, put the stop below the support, and hope it plays out and goes to the upside, given that there's reversal indicators. There is not here, right? We don't have any divergence or anything on the 4-hour. Not yet on the daily. Negative momentum just building still, so we'll see. And it's like, again, go to the weekly and zoom out, and it's like, oh my god, it's the most beautiful thing I've ever seen, all right? Oh, wow. Look at all this.
Money.
But yeah, I get the fear in the short term, right? All right, dude. Let's go ahead, move it to, now I know we discussed Palantir. Let me know if you want me to take a look at it here. I know we were talking about it in the Discord. By the way, if you're watching this, jump in the Discord. It's right over there. Talk about stocks, crypto, whatever has a chart. We just discuss it, man. We take a look at it, see where it's going, see where it might go, where it's been, and just have a good time with it, right? It's not so much fun to get wrecked alone. It's much more fun if you're in a little community of people and you can kind of just talk to each other and talk yourselves off the ledge, right? Yeah, let's move to the S&P 500, right? Which you can just tell. I'm out of Palantir for now. We'll say, all right, yeah, you can stop that or whatever. Which is fine, dude, and that's exactly what they're for, right? You were at a level of major support and needed something to show reversal, and you didn't get it, so then it just gets stopped out, and instead of it dumping and destroying you, yeah, you lose like 8% of your overall position or whatever. Okay, You live to fight another day, wait for it to get down to levels that make sense, and then get back in it, right? Especially if you believe in it, like as a company long term. All right, so it's all good. Don't feel like a loser, like you lost, whatever the case is. Everybody that trades loses. It's all about just learning a lesson from every trade, basically, and sticking your strategy, man. Sticking to what seems to work more times than fail. All right, that's what I'm trying to portray here.
Are you guys having a killer time?
All right. So, yeah, man, the S&P 500 down about 2% on the day, which is actually a pretty big move.
Oh my god.
What the hell is even that?
I don't even know if I played that for you yet, dude. Did you hear that yet?
What the hell is even that?
Got it. Thanks to you. Give you a little shout. But, yeah, man, you're below these little peaks back here, right? From November, from December. You've closed below it on the day. Yeah, dude, we got it. Yes, sir. Daddy chill. So from the little low you got down here, it's a little hammer, this little gappy hammer kind of thing, almost an abandoned baby kind of in a way. Not quite, because this upper part of the candle is touching this wick, right? You want complete separation, but one of the most bullish, but I mean kind of, right? I mean the follow through price action was unreal. One of the most bullish Japanese candlestick formations in existence, the abandoned baby here, all right? Gap down, gap up, with a little body guy, especially with like a bullish engulfing like this, a big solid green. Usually the follow through on that's pretty good. If you can spot abandoned babies like that, this one again, you want a little more separation from this third candle, but abandoned babies, dude, are rare and usually pretty good follow through price action. Especially with, oh, okay, no divergence, but I got excited for a second. Even without divergence, the abandoned baby will cry its way into your bank account. But yeah, man, let's see, let's take a look at the weekly. Weekly's building, it's got a day, it's got like 2 days, but trying to form a bearish engulfing candle, all right? And with the Fed seemingly, like really talking about slowing down the money. I don't know, dude. Like back here in November, they started talking about this in December, which is why we just started getting bullish engulfing candles after bearish. But the conversation is changing now with the Fed. So at any moment, right, if they're going to shut the money printer down, this could take a really serious like correction down. And if we're talking, I mean, what, the bottom of the COVID crash? I guess that's like the only swing low we can really look at on a weekly time scale. I mean, we're talking a 50% retrace is down to like $3,505, which is a loss of, good God, like 25%. So that's just a 50% retrace, dude. And again, with the conversation changing, they're talking about raising rates. They're talking about selling securities and stuff, right? The money printers, they're talking about slowing it down. That could really be the catalyst that corrects the market, right? That it's needed for so long in reality. It's just been stupid with its gains. But, I mean, we're talking about 25% drop from people's, like, retirement portfolios and stuff. That's what a lot of this is made up of. We're talking people, a lot of retirement portfolios, most of them I would say are like good ones, like 401k, stuff like that, probably have at least $1 million in them, right? So we're talking a drop of $250,000 from your retirement portfolio, and that's a lot, dude. That matters to a lot of people, especially amid freaking inflation and stuff, dude. Ugh. I don't know, dude. I hope the Fed knows what they're doing. Sentence of the century, right? Fed always does a terrific job, right? They've never let us down before. Sarcasm. Anyway, let's move it to a loser. All right, let's move it to Newegg here, which I took a shot on. It was showing similar signs to what I saw the first time I hit it back here, just kind of like a little bit of a falling wedge showing. Now this had more bullish divergence going on with it, right? Resulted very volatile asset, but I caught this pop here of like 58%. So selling off, approaching this level of consolidation back here in June. Wanted to take another shot at it. Negative momentum seemed to be waning a bit. Kind of class C on the RSI, so definitely not as strong as the divergence that we had in the past. But yeah, I took the position. Stop loss was below this consolidation point back here, like $10, $9.75, whatever, and got stopped out, man. All right, so got stopped out. It's below that consolidation point, and it'll probably head down to, whatever level makes sense next. All right, maybe these peaks back here at like $6.83, where I will take a look at it again, and if it's showing, let's say like we get some more divergence or something, then maybe I'll take another crack at it. Exactly, dude. Crack some eggs to make an omelet. Exactly. Sometimes the egg comes out weird, right? Sometimes it comes out like super watery. Have you ever had that? It comes out like really watery and it's just gross. This was a gross, watery egg. And yeah, I was risking like 10% of the position. Small position, but the gain potential up at the 200-day moving average, and I think it was like the 50% retrace. It's often a good first target. But yeah, the 50% retrace as well of 55%, right? So I'm risking 10 with the potential for 55, a small position, and hey, got stopped out, whatever. All right. So I forget about it. I move on to the next one and keep it on the watch list, right? Because I know it's a volatile asset that can do this stuff and has done it many, many times in the past. So it's just about catching that sweet spot, right? And getting it when it does do that again. It's not always going to do it, but you got to keep taking a shot at it to catch the volatility on an asset like this. All right. So that's what it is, man. I'll risk 10% for 50% all day long. Essentially, to me, I've got 4 chances to miss. As long as I get it that one time, if I've got 5-to-1 odds, boom, I'm making profit on it, all right? So I'll consider this miss number 1. I've got 3 more shots if I want to try on Newegg Commerce. All right. Let's move it to, let's just take a look at Binance Coin real quick, just because, one of the major coins in space. So like what, number 3 or something. All right, right at the 618, right by the 200-day moving average. Let me see, is it lining up with any kind of support? I mean, this peak back here from June is definitely a level to look at. We got to give it, we got a little bit of a swing here. We could try and find some confluence there. Okay. All right, so from even this little local swing, the 786. So we got the 618 from the swing in September 26th, and then we got the 786 from the swing from October 10th. All right, confluence. All right, levels, that makes sense. I'm not sure. We might have a Gartley here. You get 618? No way. Kinda? 5.9? I mean, it's close. That's really close, man. This would be considered. We want that like the 8. I mean, this is like kind of valid. On the daily here from October 12th, right? The 618 point B, you get like a 3% swing oftentimes, but yeah, man, and then it lining up at the 786 at the 200-day moving average. It's like, okay, there's a Gartley, dude. There's a daily bullish Gartley, the strongest harmonic in existence, presenting itself and seemingly getting a little support here. Oh my god, at the 200-day moving average. It's like, okay, interesting. And Danny, this is a perfect example of how I find harmonics. I just do a regular Fibonacci. So I go from a swing low to the high, and then I just look, right? I look where the price is now. Okay, it's near the, what, 786. Okay, I know that the 786 could be a Gartley or a Cypher. And then I look at point B, and it's like, okay, point B is kind of deep. Is it 618 deep? Okay, it's really close. And is point C lower than A? All right, we're talking about the Gartley. The Cypher would have a higher point C than A, but if it's slightly lower, all right? Max being at like the 886, but dude, it's close, man. It's really close. So it's a valid Gartley in my opinion. Conditions being as precarious and bearish as they are, I don't know if I have so much confidence that it'll play out, but add it to your argument of this being a spot for a reversal, right? Need a whole video. Yeah, dude, I could do that. I could do that for sure. But we're talking about like from this selling off point, Fibonacci, low to high, left to right, always. And it's 786 right here, right? It's right by it. So that's the pattern completion zone. And then we just go ahead, always do X, your starting point on the fib, to your ending point on the fib, and then just go to your lows and highs until you get to that pattern completion zone. All right. And I know, man, I know that's a little bit more complicated, but yeah, I could definitely put out like a video to explain that. Yeah, it is cool, man. It's cool. Yeah, like natural patterns that go on the charts, all right? It's fascinating, for sure. And again, it's just another ingredient to throw on top of everything else that you do, just to beef up your argument as much as possible, man. All right? But, yeah, dude, let's go ahead.
Right.
I feel like that kind of stuff, because that stuff is kind of complicated. You know, if I try to explain that to most people, I would just get that.
Right.
But when you do it over and over, and you practice, and you have like an idea of where to start, you'll pick it up quick, man. And it's just a matter of memorizing like which harmonics, where they end. Point B and D is usually the important part on them. And they're in the Discord, right? They're in the educational. So if you want to familiarize yourself with their pattern completion zones and their retraces, you can go in there and just kind of do it. What I did is I just wrote them all down and just kind of, it's how I usually study. I'll just read the thing 10 times to myself, and then I'll categorize like, okay, 886s and blah, 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 you know what I mean? All that kind of stuff. But yeah, man, for sure. Just trying to take bites out for now and get the, yeah, dude, exactly. There's a lot of stuff with it, man. It takes a while to get familiar with it, and eventually, dude, it'll kind of just like click, and you'll just be like, ugh, and you'll just start putting in your horizontal supports and your lines and stuff, and you'll just start doing your fibs, and you'll be able to just kind of sort this stuff out and know what to look for, man. One day, it's kind of cool, and you just can continue to learn though from there, right? You never stop learning, especially when stuff gets like disrespected and you've got a string of losers. It's like, okay, gotta recalibrate, see what's going on, and move forward, right? And eventually you can continue be contributing more than you think, dude. Honestly, I appreciate it, man. I can get any soundbite I want on the world because of you. Like, just the tech stuff, you know, is great, and you definitely have knowledge when it comes to crypto and stuff like that. You're definitely not a dummy. You're just fresh in technical analysis, which is like, if I had to guess, I'd say maybe 1% of the population could like articulate technical analysis on a level that kind of makes sense. And that's not me tooting my own horn. It's just people have other stuff going on in life. You know what I mean? Like, people are plumbers and electricians and, you know, whatever else, politicians, they don't care about technical analysis. They're just living their life, man, and investing in the ways they know how, oftentimes traditionally, and more so nowadays into crypto, right? Best performing asset class for the last decade. But let's take a look at gold, man. While everything is selling off and inflation gets flat, all right? Flat and gold. The thing with gold, though, is like, amidst the inflation going on and everything, it's supposed to be an inflation hedge. It's not really doing much. It's kind of pathetic in a way. All right. I mean, what's it up from the COVID crash? It's up 20%, dude. You could have literally thrown a dart at a dartboard with a stock on it, and you would have done better than gold. It's been range bound basically since February. Doing nothing, really. It's at the exact same price it was in 2012 of October 1st. Cool. Like, where's the appreciation? Where's the gain? Where's the value? It's like, okay, it's just been sideways flat. Why aren't people moving into gold more? I'm not really seeing like even any divergence or anything. Just kind of nothing. A little, okay, I mean, you got some hidden bullish diver, barely. I mean, not really even. I mean, you got like a lower low with more negative momentum. It's just kind of like gross. Hanging on to the 200-day moving average seemingly, but it's like it confirmed it with a little bit of a piercing pattern, and then like an immediate like shooting star upper wick crap. Just going sideways, dude. Gold, whatever. Stock market selling off, gold's flat. Okay, cool. Right, it's worth what it was worth in 2012, and those dollars were worth. Dude, exactly, and that's a good point, right? It's like when you account for inflation. Let's say inflation is 3%. And you put all your money in gold, literally, aside from the panic you had and the stress you had all throughout those 8 years until you got back up to that level, the inflation, if you had $100,000 invested in gold, I mean, what are we at, 10 years? So you've lost 3% for the last 10 years. Is that like 30%? Is my math right on that? Yeah. You've lost, what, 30% of it? So you've lost 30 grand by sitting in gold. Cool. Nice. Yep. Great asset. Great hedge against inflation, except, you know, the fact that you've lost 30,000 of your dollar value in inflation, where gold is supposed to be going up. It's going sideways. Okay, cool. Yeah, the dollars were worth more. Exactly. Trivia question. If you win the lottery, what's better? To take the payments monthly for the next whatever, for the rest of your life, or to take all of the money now and pay all of the taxes on it? You have 10 seconds.
Okay.
So you're telling me there's a chance?
What the hell is even that?
I think you know the answer, man. You know it. I'm going to move it along here. If you want to answer it, you can feel free whenever you're ready. I probably just want the money now because boom. Well, hey, you said it. The correct answer. That's the correct answer, right? You want it now. Dollars now are worth more than in the future, based on some chart that some guy with some glasses did in some university somewhere. It's always better to take the lottery earnings now and just pay the taxes on them as opposed to spread it out over time. It's a fun fact. It's gains tax. Yeah, they're going to tax the shit out of it, but apparently it's still better over time. Like it's, I don't know how close it is necessarily, but I know that taking it now when you account for inflation is better than like allocating it over 30 years, let's say. Right? Yeah, dude, for real. Some dude just, well, actually, if you take it now, you'll increase your overall revenue by 2.7%. So in every case, you should always take the money now.
Okay.
Let's move to Cordano real quick. Ooh, Cardano's weekly, kind of interesting, right? Of course, approaching. Oh, back at $1.20. Oh no, it was getting cradled so nicely, and now it's not. But hey, so it's like this was Bitcoin's $45,000. It is holding it right now pretty well. 20 holding above it, dude. It's pretty cool. What was it down? 6% on the day. But where Bitcoin's doing this crap, breaking its support and going good all the way down to its next level, Cardano's not. Cardano's holding it again. But keep this in mind, right? Bitcoin touched its support 7 times. Cardano's kind of doing the same thing. It's almost like looking at Bitcoin in the past. I don't know if it's fair to treat it like that because no, it kind of is, dude. Because like look at the 4-hour on Bitcoin. It was rejecting its 200-day moving average. Okay, move it to Cardano. It's rejecting its 200-day moving. Dude, it's like a freaking. It's like looking in a time machine. Got rid of that support. Put that back there. That's important. It's like looking in a time machine, dude. Where'd it go? All right, rejecting. But $1.20 is a strong level of support. So, like, dude, if you're taking a position on Cardano, if you want to take a shot at it, go okay. You're just risk 5% to get back up here, get like 10%, I guess. Maybe like the 200-day moving average is up there now. Would love to overlay altcoin on Bitcoin so you can see if there's any divergence on the coins. You mean like, I think I know what you're talking about. You definitely can do that, like a Bitcoin pair. You can even put this like up here, dude. Like a little 12% if it reverse here, okay? All right, 2.5 to 1 reward, But the stop is just stupid easy to place, right? So if you want to risk 5% to take a shot at it, hey, go for it, all right? You're not getting any of the reversal indicators that I want to see to take the position, but it's just an obvious level of support. But again, you're mirroring the 200-day moving average crap that Bitcoin was showing before it dumped through. So if it plays out like Bitcoin's price action did, it's going to dump through and you might go to $1 super quick. And I mean, that's not a joke. That's 20%. Right? From where you are now? 17%? Okay. Yuck. All right, let's move it to, I'll take a quick look at the Nasdaq here. The Nasdaq, the top 100 companies by market cap. Same crap, right? 3, 2, 1. So, I mean, down like 6% over the last 3 days. Not a joke either. That's pretty bad. These are like the top blue chip stocks. I mean, the Dow is the top 30. That's more of the blue chip guys, but 100 is less than 500, which is the S&P. And those top 100 ones are selling off harder than the top 500. So you are... I don't really know, dude. Well, like, what support are you at? Oh my god. That's the most disgusting weekly candle this maybe has ever had. Except for back here in March of 2019, before rallying. Good lord. That's bad though, dude. Wiping out the last two. It's wiping out this entire area of consolidation. As long as you pivot above 189, you'll have some hidden bullish divergence, maybe, kinda. I don't love. I hate when momentum starts to go wane positive and then just boom shoots back up in the negative, dude. I don't like that at all. It just disrupts the flow. But and now you have almost a 3-line strike, right? If there was another green candle, 3-line strike, consolidation, obliteration. Not good, dude. Again, Fed's changing their tone on things. This could be the candle that sends us into a freaking real correction, dude. It's tough to say, man. This is new information and a new tone that the Fed is taking towards monetary policy. So, we'll see, dude. All right, dude. I'll see you, man. I appreciate you being here. All right, last one. We'll end it on an altcoin here. Let's take a look at Dash. Dash, the beautiful harmonic asset at the pattern completion zone of a bullish butterfly. Right, almost perfectly. 786 to the 1272. Nice, man. And getting its reaction just like everything else, okay? Below the 200-day moving average on the 4-hour. Not great, but something to look at, man. I mean, notice the harmonic power on this asset before. The shark. And then the, what the hell is this? This was kind of a nothing. What the hell is this? Bat? It's not a bat even. I don't know why I plotted that. The 786. Hey Ryan, that's nothing. Just an M shape. Okay. But now it's at the 1272 of a pretty classic textbook butterfly. So we'll see if we get the price action, man. All right, cool. I have been live an hour 14. That's gonna do it for me. Let me just move into Bitcoin again real quick. Yeah, not much to go off of here. Okay, here we go. All right, this is what we want to start seeing. Pivot, positive price action, getting back up. To the 4-hour. Really, if we want to go from this dump, 50%, retrace up to like 44,585. I don't know, dude. We'll see, man. This is gross. Very gross. This is going to be a beast to get through as far as resistance is concerned now. So, like, when you break through major support, it becomes major resistance on the way back up, dude. So just keep that in mind for what we need to accomplish to get back to pivot and head back towards the upside, all right? But yeah, dude, that's going to do it. I'm going to get going. Danny, appreciate you being in here, dude, as always. Anybody else that's seeing this, appreciate you guys as well. The love of the support that I've gotten from you guys. Go ahead, hit the like button if you could. Just helps me with this YouTube crap and helps the channel be seen and all that kind of stuff. Help me educate some minds when it comes to trading and just kind of share my passion here, dude, really. So, yeah, go ahead, hit the like button, hit subscribe if you could. I'd appreciate that. Jump in the Discord over there. That's really where I push trade setups. We just talk about stuff, man. It's all free. It's all just to do, right? And follow on Instagram, follow on Twitter, man. That's really it. I'm going to get going. I can smell a beautiful steak cooking up. Oh, my goodness.
Coming at you! Nice!
And, yeah, I'll be back. I should be back on Friday. Until then, keep it chill, keep it real, keep it fresh. But more important than that, as always, keep it technical. All right, peace.